Hey guys, we're back for another Attachment Point News Roundtable. I got John and Carey from Loop in here today talking about the car insurance they just launched to take care of the non-Main Street guys, the people we don't think about all the time. I really appreciate you guys doing good work and just taking care of people who need some help out there. How are you doing today?
Hey, we're great. Thank you for having us. You guys have a respected platform, so when you reached out, it was an honor for us to jump on.
Yeah, insurance are fun. It's pretty much community curated. Just a lot of people nerding out on this stuff, helping each other out. I love the kind of blue ocean of insurance, and even I talked to you guys about Nestor and Sigo ahead of time, saying I see mutual missions. You're cheering him on as I'm sure he's cheering you guys on. Yeah.
Absolutely. Insurance is such a community of people. It's like wonderful to have so many great relationships where we can draw on other people who are out there sort of fighting similar fights and trying to take on similar challenges. So folks like Zigo we're big fans of. For those that don't know, they're launching an insurance product. They're an MGA like us. That is targeting Hispanic and Latino communities, and those are underserved and overpriced, so an important thing to be out in the market providing. So yeah, we're big fans of them.
Yeah, they're doing cool work. It's kind of fun. I'm half Mexican, so I mean, I totally just appreciate that mission. I think it's really cool. And then for yourselves, I heard you on Carol's podcast. I'll say Carell's podcast. Just mentioned the intelligent use of the data. It's funny. You hear people talk about analytics, you hear people talk about data, but it never seems like they actually use it. I feel like you guys are one of the first companies that's actually not talking about data, but doing something with it.
Mm-hmm. Yeah, that's exactly right. So to give you just a little bit of context on Loop, we're a brand new managing general agency, so an MGA. And what we're doing, as you said, is taking new data, new technology to more accurately price automobile insurance risk. We're honoring really the tradition of insurance by trying to measure and understand what causes car crashes so that we can advise our customers about how to stay safer on the road. They can better manage their own risk, and we can provide them a really great price without using some of the more traditional demographic proxy rating factors like, do you have great credit? Do you have a great job? Did you graduate from Harvard? We've sort of thrown those out and replaced them with an application that monitors where you drive, how you drive, and whether you're driving on unsafe roads, so that we can deliver back to our customers, again, insights that say, hey, here's a way that you can keep yourself and your family safer.
Yeah, absolutely. And then, John, you're the outsider. You accidentally stumbled into insurance. It sounded like, from outside looking in. How'd you accidentally get caught up in our crazy little niche world?
Yeah, I was really drawn to the opportunity for impact in this space. And so Carey, who's my more technical counterpart, just described, to your question, how we can leverage the data and technology. But in my view and in our view at Loop, the technology is really a means to an end. And I think that's where a lot of I think that's why we have a big opportunity, is because people with great technology want to go on about the technology in and of itself. But technology only serves and data only serves a purpose when it's used intentionally in the direction of furthering a certain thing. And in our case, we're a mission-driven company. We are a public benefit corporation. We're a B Corp. So this idea of social impact is baked into our model, where we believe that using these demographic data to price customers like the legacy insurance models presently do, we don't believe that that's the most equitable arrangement for a lot of people. For example, you're penalized if you didn't go to an Ivy League school, if you work a blue collar job, if you didn't go to higher education, if your income is lower, if your credit is lower, if you live in a lower income zip code. All of these factors play a part in predetermining your price. How's that? So it's like, before you even get to demonstrate that you're a safe driver or whatever, it's like your score is largely predetermined by things that oftentimes are, just more correlated to your life path. And so what I saw, to your question, like, why did I get up in this industry? I just saw a phenomenal opportunity to partner with a wonderful entrepreneur like Carey, that has built this phenomenal industry expertise and really understands this stuff really well. And then we can combine it with my go-to-market talent and say, okay, can we package this technology in a way that's really relevant to an end consumer? And rather than have this B2B model, which I think we will explore in later iterations of Loop, I thought that let's let the market decide if we're right or wrong. I don't want a gatekeeper to decide, like, to get jammed up in the politics of getting a product approved, because then we'll never know if the technology really was meaningful to the consumer. Let's create let's find a business model. In this case, it was the MGA, to express the technology directly to the market. And if customers love us, then they love us. And that's the market speaking. And if they don't, then they don't, by the way. But if they do, then they do.
I noticed that you just put CEO and founder on like 8 months ago on LinkedIn, and Carey, it was like 6 months ago. But I think Carey had been working in the space before. I do feel like you guys were kind of saving your marketing pop, which is kind of a lesson out there, I think, for companies and startups. You can only get attention so many times, and there's only so much attention.
What a good observation. Yeah. We were in stealth mode, and we wanted to have enough of certainly the technology was there from Carey's efforts. We wanted to make headway on the insurance operation side and making sure that was pretty close to being set up. Having our go-to-market states identified, having our branding, having our funding in place as well. And when all that stuff came together, we said, hello, world. Nice to meet you.
That's cool. So like my nerdy self, like how far ahead were you guys working? Was this kind of the ball rolling 2-3 years ago? And then like lately it's like, by the way,
Yeah, I mean, the technology has been being built for multiple years, but the sort of relaunches Loop and the hello world moment of Loop had been really, I think, about 6 months of hard work and planning ahead of time. And what was really important, I think, too, to stress there is we really wanted to lead with a mission, so people understood why we're doing what we're doing and could feel a part of this journey with us, really supporting us and being not just eventually customers, but advocates for what we're doing and align with us on what we're trying to accomplish. So internally, I would say about 6 months ago, we took a B2B business that was servicing insurance carriers, a very hard data product, and repositioned the entirety of the brand because, frankly, they're not our customers anymore. And we need to get to know our customers and service those customers. So it took, I would say, a solid 6 months of dedicated focus and energy and effort to reorient ourselves and our speak and our purpose around this new mission.
Well, it's interesting you kind of say ourselves and our speak, because where I've had like a weird, not to say edge, but I got licensed 6 years ago, had my first full-time role like 4 years ago, tried to do my own thing, could only get access to the insurtechs. So part of the reason why I'm on the frontier is because they're the ones who were friendly out the gate. It wasn't like I was like, insurtech is better, the other things are bad. It was like they just gave me that to get going. So I think
interesting.
Where I'm maybe kind of hanging around these situations is like, I'm not like an incumbent, I don't have like legacy insurance experience I have to kind of move out of, but I'm jealous of those guys. Like I don't necessarily look at it as an entirely bad thing. But so I think like the ground level.
It's interesting because I think insurtech as a term can get a bad rap. Like we're trying to disrupt or totally overturn the way things have always been done. I think insurtechs could be more humbly described as those that are embracing technology and modernization of systems. There's a lot of data, a lot of computing power available to us now, and startups are in a position to be much more nimble to take advantage of some of those advantages. And so to your point, like insurtechs are great to work with if you're a consultant or looking to grow a new business adjacent to insurance. Look at insurtechs, give us a call and say, hey, I've got this great data or this great product that might make sense for what you're building, because we are in a position to not take 10 years to decide that, in fact, we're going to add a new variable to our rating factor.
Yeah, but if
do it in 6 months.
But if I could add to that, there is a complexity though here, and that is that insurtechs often create more novel, more cutting edge technologies. However, the distribution is really in the hands of the incumbents. right? They have
Right.
incredible market share. I mean, you rarely see this kind of concentration of market share in an industry this large, outside of banking and insurance. And so what the insurtechs have is this unique challenge where it's like, you got to take your product and go through several layers of like, not only is your product better, but then the political aspects of getting the product across, and like, it could just be really hellish, and the sales cycles are really slow. And then ultimately, if you don't have the ramp in the sales cycle, a lot of insurtechs end up being vulnerable, waiting on incumbents to take on their products. And so
Yep.
that's one of the key reasons why we decided to pivot to the MGA model, because it's a slog. It's a lot harder to do. It's a lot costlier. We're gonna have to raise a lot more money, but we feel like the control is a little bit more in our hands to bring this directly to the consumer. So anyway, I love the dialogue around the insurtechs, and we're part of the community. We're rooting for all of our peers in this space. But it's not lost on me that, it's really tough when you are reliant on the incumbent to decide that they want to use you when their bottom line is perfectly healthy enough.
Well, they can't even use you sometimes. Like, their stack is set up in a way where literally they can't even plug in and run and play with you. Like, I think they almost have to choose their own horses to set up alongside. And I think what you guys have done really intelligently, which I'm sure a million things across the board, but just find that sliver, that underappreciated market, those underserved people, and take care of the people aren't taken care of, and I think that's what this industry is all about. I joke insurance is one of the few things where you can like generally do a good and take care of people, and you can make really good money. There can be good outcomes, like
Feels
Facts.
good to do it too, right? We make it our business to care for other people. And the more we can care for you, the more we're going to grow our business.
I don't
Brett,
know.
the other day sorry, go. Please.
Oh, no, you're good. I don't know if it's on Andrew's pod, but you had mentioned, Carey, that we don't realize the fiscal weight of driving a car around. And if you don't have insurance, it's nearly impossible to be a driver financially for 99% of the pop. But yeah, sorry, John, you were gonna.
Well, I was just gonna say, just to take the caring thing to kind of a funny place. The other day on my on Twitter, I just tweeted out like, "Hey, anyone need anything random? Just let me know." It was an exercise in caring for me. I posted on my Instagram, and I got 2,000 comments of people, literally 2,000 comments of people saying, "Well, I need a flat iron. Is that something you can do?" Cool. I DM'd her and I said, "Hey, send me your." I sent her a flat iron, and then someone said twin high baby chairs and a cord like for gaming and a mouse, and like I sent all these things, and I probably spent $300 doing so not a huge amount, but it was an exercise in caring. Yeah. And we're so excited to push the bounds on delighting our customer. What types of things can an insurer do that maybe they're not doing right now that we could do? And can we push the bounds on having people be completely delighted by their insurance carrier and being like, whoa, this is really awesome. So that's something that we're very excited about at Loop.
Yeah, it's I'll call it tranches of personal risk, and it's a fiscal contract, and it's data over what needs to be taken care of. And at the end of the day, it does come back to people too, and you want to generally take care of people. Just like a 2 cents from a side, I'm working with Nadeau up in Canada that's building a single platform for multiple types of financial planning insurance. And they've done a great job of building a network of like online will and trust, for instance, like associated services, and they've handed off. So if you see other like community champions, people you could really want to cheer on, kind of sharing databases, sharing marketing flow might be a really cool way to help each other succeed. Yeah.
That's awesome.
Yeah.
I think that made me think of just like the tangible ways that we can be helpful. We're always looking for new and more like helpful ways to communicate with our customers. So for example, we're collecting a ton of data around where car crashes happen. We've collected over 100 million crashes so far, and we've mapped them all: time of day, location, understood the context. What was happening? Was it raining? Was it snowing? Is it a wide road? Is it a narrow road? We have all of this amazing insight built up over decades. And it's a mystery to me as to why insurance carriers who similarly have similar data haven't yet turned that right back around to the consumer and said, hey, when you're taking off for the holidays, the day before Thanksgiving is the worst possible day. We're going to donate
$5
Yeah.
or to be on the road. It's a great day in general, but it's the worst day to be on the road, right? Hey, we're going to let you know that. So raise your awareness around just, hey, I'm in an unsafe place at an unsafe time. That alone is going to help some drivers actually change their behaviors. But in addition, then you're actually improving your risk profile. You're improving the pool of business. You're helping your customers help themselves and help you grow your business. So it's mission aligned across the board to be giving these insights back to customers. Hey, you're driving near a bar at 2 a.m. in the morning, probably not a good road to be on. Hey, your high school student takes exit 13 in Connecticut, and that's the worst possible road literally in the entirety of the state of Connecticut, and it's near like 3 or 4 high schools. All of these things that we know that we should be sharing if we really do care about our customers. And I'm hoping that Loop's able actually to deliver on that brand promise that I think insurance gears have sort of missed the opportunity on up to date to really go above and beyond and use the data and use the technology to help folks better manage their own risk. Stay safe on the road.
Totally. It's almost like a Loop Waze system where you have like little pings on your phone, like I'll go right here. Kind of random where I think this is a little bit of like pontificating, but I heard in the Northeast they have like a feudal system to business, like you have the owner, managers, hierarchy. And I heard in the West Coast kind of startup land, it was more flat, born out of all the semiconductor companies, whatever else. So you have silos over here. You have these legacies, and they're just not talking to each other. They can't. They're too busy. There's too many reports up and down. Their systems weren't set up for it. And we're over here like the data's talking to itself. And it seems like the hybrid of like running it like a classic company while using the benefits of data seems like the best of both. Like not trying to be too cute in how you set it up, and also not trying to, just kind of getting rid of some of the layers that weren't helpful.
Yeah, that's exactly right. It's a virtuous loop, right?
Yeah.
It's like, hey, having more powerful data, delivering it to the customer makes them make better decisions, leads to more profitable underwriting, and that leads to lower prices for the customer, which leads to more usage, and it just goes around and around. So I never thought that I would be fucking pumped about insurance, but here I am.
Yeah.
And, I just think it's like what I like about it's a meaty business.
Right.
I mean, can we talk about that for a second?
Totally.
This is a hard business. Like, dude, it's not my first business. It's not my first rodeo. I've done a number of things. I even most recently built a venture capital fund from scratch with my partners. That pales in comparison to the difficulty that is running an insurance company. Like, we have an entire data science team. We have an entire engineering team. We have a marketing team. And then we have the insurance ops, which has like, claims underneath and claims handling and like the regulator piece and the actuarial science. It's like, I have a newfound respect for you, Brett, and everyone in the field, because it's just like everyone's, trying to find their white space in this big market that can seem like a faceless, endless, array of possibility. And I think people are just trying to find their little piece of the pie and, trying to grow a brand within there. So anyway, I just wanted to double click on, as a newcomer, I guess, to the space, like, this is hard, man. And like, the incumbents are underwriting at X percentage loss ratio on average. So it's like, if it's the case, this is something we think about a lot, right? If it's the case that Geico and, USAA, they're underwriting at 75% average loss or whatever, who the hell are we to think that we can outperform that? Right. And that's what a startup has to go into this believing. Right. Like, you can't join the league and say, all right, well, I'm going to let LeBron take it. You got to join the league and say, I'm coming for it. So it's like, but it's, and then so people say, okay, like, you really think you're going to be able to outperform decades, if not centuries of experience? Like, what gives you the audacity to feel like you can? And, in our case, we believe that we can, but it's not lost on me that, these companies are run by really smart people. And, it's going to be hard, but you gotta.
As a startup, you have to be motivated again by mission. So you have to
That's
find,
exactly where I was going to go.
Yeah.
Yep.
yeah, you have to find purpose in getting excited to take on such a big, like David and Goliath sized problem, right? And I think for me, what motivates me every day to get up is this is a problem worth solving. That optimizing for people's care, optimizing for people's health, optimizing for people's safety keeps literal people alive that
Yeah.
would otherwise not be. You know, traffic crashes are the leading cause of death of people aged 25 to 40, right? We're really talking about people that have a lot of potential to live great lives that are dying at rates that are unprecedented. Each year, traffic crashes going up, went up during COVID. What are we doing as an industry if we're not caring for people and sustaining life? And that to me is just like every day I get up, and while I don't think about crashes every day, I think it's so normalized as part of our society and accepted. So you turn on the local news, you get the weather and you get the traffic report, right? Like
Good point. Yeah.
traffic crashes are that much a part of our lives that we tune in to the news, the local news, to know whether, you know, so and so got arrested and whether there was a traffic crash that's going to like delay my commute in the morning. So that's got to change. As part of our mission, we have to not only be selling insurance, we also have to be reducing the risk, reducing crashes, teaching people ways that they could improve safety. And again, it's to the benefit of our business that we would become more profitable. But at the end of the day, it's like I said, a really important mission for us to be organized around. And what motivates us and gets us excited is that this actually can have an impact on making people's lives significantly better.
Oh, totally. And it's kind of interesting. You drive your loss ratio down, you can almost not say broaden the coverage, but you can create better policies, you know, and it's super interesting.
Yeah, the risk should match the rate, right? Like we're not the lowest cost product. We're not selling based on, hey, we can get you the cheapest possible rate for the lowest quality insurance. What we're saying is we're using math and data to just get you the rate that's right for you, that represents the risk you pose, so that if something does go wrong to you or to your community, we're collecting enough premium to care for everybody. That should be our goal.
100%. And then on the personal line side, if people don't have enough coverage, it can get a little scary too. Like even if you go bankrupt, right, it'll follow you. Like the debt would follow you around. The personal auto accident.
For sure.
Yep.
And there's a reason why 15% of people are uninsured, right? They either can't afford it, but if you get into a crash, that'll follow you to your grave.
Right.
So these are problems we need to be solving, not just, it's a good point. It should extend beyond the health and safety and care of customers, but also their financial health and financial security, and the implications of not only giving them greater access and greater mobility to access jobs and opportunities they otherwise couldn't, but preparing for the circumstance that if you get in a crash and you're uninsured, you have now taken on a financial burden that will significantly impair you for the rest of your life.
That government student loans, I'll say alimony, probably a few other
things. They'll come get you.
Yeah. Can't go BK. No, it's a wild world. And I used to do outside sales for a moving company. I lived in Orange County. My territory is downtown LA, so I spent plenty of time in my car. Before my last like official day job, I was commuting to El Segundo, which is like LAX from Orange County up and down the 405, just in a sea of cars every day. So kind of growing up in California car culture, you know, can definitely see the import. Even our own little baby brokerage, I analyzed, you know, the book from this last 6 months. I was surprised 40% of it was auto insurance premiums, personal auto. You know, you get so excited about commercials, you get so excited about whatever else. And it's like, no, like auto insurance is still a big anchor, you know, across the board. Yeah. So what states are you guys in right now? And do you have the roadmap tentatively penciled out for the next couple? Is that something you can get into just yet, or no worries if it's behind the curtain?
Yeah.
You know?
No, we can offer a little peek. Definitely looking at Texas. Texas is an attractive market for us. Very large auto market. Very populous, very diverse, big driving culture. And just a tremendous amount of premium written in Texas. So we'll be looking there. But also have a number of states slated on our rollout. So Illinois, Pennsylvania, Ohio, New York, all states that we have done plenty of analysis on and feel really confident about their insurance ops climate there, the regulatory climate.
New York's the
And
only scary one you mentioned in that bucket so far.
yeah, you know what? I think people get intimidated by New York because of the regulatory approval, but from a loss ratio perspective, performs well. From a key market perspective, you got to be there.
Yeah.
And then another thing that we have uniquely at our kind of that works to our benefit is that we have really strong actuarial justification and a really tight insurance product that actually helps to alleviate discriminatory impact, which is the number one concern of most regulators. So that's bolstering our confidence with the New York Department of Insurance. And we would hope that, the momentum and the win that we have to our back around making more equitable car insurance will aid us in the entry of these markets.
Yeah, New York wasn't bad. They were quick, just a few more hoops. The other states you mentioned were pretty easy. As an independent agent, I helped Nadeau quietly get licensed in every state. So that was an interesting task. There's only one state that really scared me. It was very slow. I'm nervous to mention it off the top of my head, but they have the Boston Celtics, and I like that team a lot. But a state is great state. I don't say anything negative.
Well, what's cool about that state, in addition to a few other states, is they're starting to see the writing on the wall and changing their regulations to recognize that some of these historical and traditional means of qualifying risk and pricing risk do have structural bias built in. Now, are they correlated to crash outcomes? Are they correlated to claims? Absolutely. No one's arguing that. But could we do better if we swapped or used different variables, or at least tried to explore and understand what else we could do to more accurately or more dynamically or more precisely measure the risk? Instead of knowing your educational attainment, I'd much rather know, for example, where you drive, when you drive, how you behave. If I'm going to choose between those two things to figure out if you're a customer that's going to file a claim, I'll go with the latter all day, every day. So what we're seeing is state regulators sort of get excited about some of these new alternative measures that do get rid of some of that historical legacy that maybe should be revisited in every 20 years or so.
Yeah, totally.
What's interesting about that, Brett, is that this is probably one of the few times in my life I have ever seen the regulatory community set the tone on the macro trend and on innovation. You rarely see that. Lyft disrupted the hell out of the market. Airbnb disrupted the hell out of the market. Regulatory caught up. Private industry lobbied against. In this case, Governor Inslee of Washington proposed removing credit. Michigan, it's you already can't use it. And you're starting to see a top down moving away from these antiquated criteria that there's plenty of research to suggest that it perpetuates structural bias for certain communities. And so what you have is like the private industry left with this dilemma where so much of their weighing criteria in their rate filing is dependent on these factors that are being legislated away. So what happens when there's a big void in your model and you now have to have alternative risk models to account for someone's price? That's why I really believe that we're ahead of the curve in this respect. And you're starting to see auto manufacturers head in that same direction, not with a large degree of success as of yet. And it's funny because I spoke to an insurance executive and I had cited Tesla and GM as making the move. And they said, well, what gives you they're not exactly great examples. My friend, don't sleep on the iterative power that is entering with a shot EV1 and then just improving upon it. What I'm looking at as an entrepreneur is a direction of the market. And from the regulatory climate on over to the auto manufacturers who are all thinking about existential risks all the time and put a lot of research into what move to make. And certainly before you announce a move publicly, like they put a lot of research into that. It tells me that we're moving more and more into this world of having a data-driven policy pricing. And I just think that I just couldn't be more excited for our timing in that respect.
And I don't want to hold you guys too long today. I have a feeling you're back to back a little bit with the launch of something like this. But on the last note, kind of on my end, I was actually pleasantly surprised by Department of California's Department of Insurance. Like literally everyone I've got on the phone with, whether it was like New Hampshire, Oregon, whatever, I've had generally positive experience. Don't get me wrong. It's not like maybe they don't call you back today, but say, hey, leave a message. We'll call you back tomorrow. Like they're helpful. They're well-intended.
Good to know.
I like the people around the industry. It's been a good experience. And if I can help out with anything, definitely reach out. But so where should guys look you up, or where should people follow you? Where did you get the Loop story?
Yeah, well, stay in the loop, folks. I appreciate you guys listening. We're at Loop Insure on every social platform. We're a very social first brand. So follow us at Loop Insure on Instagram, on Twitter, on LinkedIn. You can reach me at John Henry Style anywhere on the web. And I think Carey's is CA Nadeau, Canado. So
as a big nerd, I've enjoyed following Carey for a while on Twitter. I've been following John for like a week, and like great content so far. Got him on a couple different platforms, a couple different messages, and just good stuff all the way around. But I appreciate your time today, and thanks for having me.
Can't thank you enough for having us. Really a respected platform that you've built, and we have a lot of respect for you and your community. So thanks to everyone for listening. If you're still listening at this point, I would like to engage with you and personally thank you. So please do reach out on either Instagram, Twitter, or LinkedIn. And I can promise you right now here on the airwaves that I will manually respond back to every single listener that takes the effort to write back. So thank you. We can't wait to bring Loop out to market. We are hiring, by the way. We're hiring like wildfire. So we're bringing on data scientists. We're bringing on marketing folks. We're bringing on insurance ops. We're bringing on software engineers. We just raised a little bit of money and we got to spend it. So come reach out to us. You can be a customer, you can be a community member, or you can be a supporter. Either way, we would love to build with you.
Good stuff, guys. Oh, thanks, Carey. And then I'll make sure to link everything up in the post, and we'll see you soon. We'll look forward to the next episode. Thanks,
all right. Cheers. Thanks, Brett.
Yep.